I mean, when we look at 2026 and beyond, all companies should be using AI within their work streams. We're seeing a lot of different kind of workflow automations that are coming about and getting a lot of funding in the space as well. So I think just the day-to-day life of corporate worker is going to look very different and hopefully more productive. The AI investor buzz is really hot right now. As I said, I think 2.4 billion came into the AI space just in the UK in the first half of this year. So talking to investors, they really want to make sure the company itself has other great performance metrics like churn and revenue. Revenue per full-time employees is big these days as well. So, for example, for like legal tech AI, that industry has probably been ripe for innovation for years and years and years.
Welcome to the AI Adoption Podcast. I'm your host, Professor Ashley Braganza, and it gives me great pleasure to welcome Sydney MacGregor from HSBC's Innovation Banking to this episode. Sydney, thank you for taking the time to come and talk to me and my listeners. I wonder, before we get started, if you could introduce yourself and say something about the area of HSBC that you're in, which is innovation banking, please.
Yes, thank you so much, Ashley, for having me. Very excited to continue these conversations we've been having. But yeah, as you said, I'm Sydney MacGregor. I have been in technology banking for the past 11 plus years. Majority of my time has been in San Francisco at Silicon Valley Bank, working specifically with the fintech industry at the time. I moved over to London, I guess 3 years ago almost. It's crazy it's been that long. It was supposed to be a 2-year stint, but here I am, probably staying for much longer. But yeah, so I help lead the enterprise software vertical here at HSBC Innovation Banking. The bank itself is kind of separated out into different stages and sectors. So my area of expertise is what we call enterprise software venture and growth. And enterprise software, sometimes that title's a little bit deceiving, but you can kind of think about it as B2B software companies. And as you can imagine, a lot of those companies right now are very much AI focused. So my portfolio of around 260 clients, the majority of them have some type, if not all of them, have some type of AI function to them. So hopefully can provide some unique insights today.
Great, thank you. Let's step out of the detail just for a moment and just get your views on what do you think is the current state of AI companies in the UK right now?
Yeah, good place to start for sure. I think obviously we're in a very defining moment, especially in the UK. I think around $2.4 billion went into AI startups in just the first half of this year, which is a pretty incredible number. But it's no longer kind of AI is no longer treated as a standalone entity anymore. It's kind of becoming the core driver of infrastructure for a lot of enterprise software businesses today. I think in just my sector, we see it across HR tech and legal tech, CRM systems and marketing tech. So it kind of hits it hits every company that I'm working with today. So it's been kind of fun to watch the scale of businesses specifically in the UK. The super scalers today are really fun to kind of hone in on as well. The Synthesias of the world and Quantexas. I know Quantexa is kind of a UK sweetheart story as well. And then specifically, yeah, I'd love to talk more about like legal tech and the Harvey, Legora, Luminances of the world as well. So been fun to try and keep track of all of these companies.
And what do you think are the strongest areas of innovation that you see emerging? Well, not just the UK, but more broadly, but maybe starting with the UK.
Yeah, definitely. I think, Overall, I'd be remiss not to just touch on, although it's not my expertise, but touch on just like life sciences, healthcare industry right now. I think that the way that AI is touching that industry is going to be super interesting to kind of watch um, next year and years beyond and see how it affects both industries and consumers. But specifically in my space, the AI agents right now are kind of the hot topic.
Mhm.
Companies are quickly moving from those AI chatbots that I'm sure that you have also been very frustrated with in the past. I know I have, and moving more towards AI agents, which can really kind of take actions and make real-time decisions, which is super interesting for both consumers, but also the enterprises themselves. They're becoming way more efficient, way more productive, very much cost saving. So I think that is a very interesting space to watch at the moment.
I just wondered, you've given us a really good understanding of what some of the emerging areas are in the UK. How does the UK compare against other AI hubs in terms of scaling AI businesses?
Yeah, good question, and one we definitely talk a lot about with our client base. I think when you speak to them, they would say that, of course, the UK has always had great research capabilities, amazing talent pool, and has been historically a great place for early stage funding, which is awesome. The area I think that could continue to get better is that later stage funding. We're seeing a lot of AI companies have moved towards the US. The US has obviously a lot of investor syndicates that are interested in the space as well. It's a larger market. So I think in order to compete with countries like the US, we really need to hone into those strengths that I have spoke about. Um, and so I think it's just crucial to scaling AI companies within the UK.
And are there the U in some ways the UK government is working very hard to try to keep companies here in rather than them going off to the US or other places for that scale up funding. Um, are you seeing that there's enough being done, or is there more that could be done in terms of supporting those companies?
Yeah, I think there's always more that could be done, but I think what the government has done today, we're really supportive of. I think our client base is also really supportive of. I think the focus now needs to be more so on developing the clear program for how the government is going to further that agenda going forward and make sure that the private and public sectors are working together, in order to do that.
And do you see investor appetite in AI continuing to be as strong as it has been based on the numbers that you've already mentioned?
Yeah, definitely. I'd say the AI investor buzz is really hot right now. As I said, I think 2.4 billion came into the AI space just in the UK in the first half of this year. So I'd say that that's probably just going to increase as the months, years go on. I'd say it's super interesting kind of to watch just those super scalar AI companies in the space right now and see what investors are talking about, because right now to raise capital, you're competing against companies like the Fixer AIs of the world who are really growing their revenue base dramatically over just a few months. You see some of these superscalers grow from 0 to 25 million pounds in ARR just over a few months. So if you're raising right now, that's kind of what you're competing against. So I'd say AI is really a hot topic that investors are really taking a look at. That being said, more to the story than just the revenue scale. Talking to investors, they really want to make sure the company itself has other great performance metrics like churn and revenue. Revenue per full-time employees is big these days as well. So yeah, definitely a lot of, I guess to summarize, definitely a lot of investor appetite within the AI space. But of course, there's always going to be room for some improvements as the money comes in.
And are there particular subsectors that you're seeing which are particularly open for investment?
Yeah, definitely. Within the B2B software space, I'd say generative media and creative AI has been a popular topic this year and in the past. Companies like 11 Labs and Synthesia, who I believe raised around 200 million this year. That Synthesia remains a large UK standalone company as well. Legal tech, like I mentioned before, has been a place where a ton of investment has come in. Not a UK company. This is a US company, but Harvey recently announced a 160 million equity round at 8 billion valuation. And that will bring their total equity raise this year to 750 million, which is wild to think about and really puts them kind of in a great position for the advancement of legal tech. And in that industry, you have other competitors like Legora and Luminance, Wordsmith AI as well, who I would expect, continuous raises from in the next few months, years to come.
Any thoughts on what it is that makes some sectors kind of more attractive to AI investors rather than other sectors?
Yeah, I really love that question. I'd say for legal tech specifically, it's kind of about the industry that they're in. They are in the industry, obviously, of law, which is an industry that has probably been ripe for disruption for years now. So they can kind of sell into not only law firms, but also all of the companies that need contracts created and other legality advice as well. So some of these companies are selling into just law firms, some into kind of in-house lawyers, and then some both. So there's just a huge, I think just the total addressable market in something like legal tech is really large and very interesting to investors right now.
And these investments, I know clearly London is a big hub for investments. Are these investments just centered around London, or are they more spread across the UK?
Yeah, I'd say right now we're still seeing the majority of AI investment in London, but a story this year has kind of been the expansion beyond London itself. So we're seeing a lot of investment into the Cambridge, Oxford areas, Cardiff as well. And I think that's really great just for the economy itself, but also just the ability to kind of scale AI and continuously get more people involved in the space. So I imagine that continues in 2026 as well.
And and what's driving that expansion in those areas in terms of AI? Are there specific characteristics or features, or are there specific issues that are attracting investors into companies in those areas?
Within the regional spaces,
Yes.
yeah, I'd say, I mean, when you take like Oxford and Cambridge, for example, and I've touched a little bit about this, not my expertise, but just the healthcare, life science sectors, that's huge in those areas. So I imagine that it's just the start of investors kind of exploring those regions and kind of, yeah, figuring out that those exact ecosystems and how they can help support.
Yeah, and I guess the government again is very keen not just to ensure that companies that want to scale can get that funding here in the UK, but they're also very keen to make the UK an attractive place to build and start up AI companies. Um, what'll help ensure that the UK remains at that kind of front end of AI startups?
Yeah, I think it's probably threefold. It's continuous capital, supporting people and kind of supporting the adoption of AI. So continuing to unlock that domestic international capital is really important. The reforms like Mansion House and British Business Bank is going to be great for that later stage funding, like I spoke about. There's a lot of early stage funding, and I think we need to consider how best to support that later stage company as well. And just kind of to ensure founders have compute talent and that clarity around regulatory guidance within the AI space is going to be really important. On top of that, it's really just the strengthening of the AI adoption itself as more demand of UK enterprises generate AI solutions, the more local startups will scale and remain in the UK.
And are you finding that that level of adoption of AI is starting to increase?
Yeah, definitely. I think the market demands it. The market demands it on the investor equity side, but also just watching the effects of AI in businesses is pretty incredible and watching their costs go down. If one company in the space is using AI and the other one isn't, it's going to be very obvious to see kind of those numbers on paper of who's scaling more efficiently, who can spend more time on sales and marketing than their AI agents or AI chatbots is going to be kind of a deal breaker of who wins in the space.
And I guess it's important that companies, when they're starting up and when they're trying to scale, have the financial support to be able to invest and achieve that scale. Um, how can institutions, financial services institutions, I guess HSBC's Innovation Banking is one. There are others as well. How can these institutions help support companies as part of that growth?
Yeah, there's a lot of different ways we can help support. I'd say the main one is on top of equity, companies in the AI space and others also take on venture debt. So after a record year of 2024, Europe saw a funding of $4.5 billion in venture debt financing just this year. As you said, part of that's HSBC Innovation Banking, and there's other players in the space as well that are increasing that number, which is just good to see for the market because I think more capital into these businesses is really important. When considering venture debt, I'd say just the specialist lenders are going to be important to make sure that you kind of have the right venture debt in place. So sector expertise is increasingly kind of crucial to any partner working within the AI space, especially in the life sciences, deep tech, or enterprise software. And I think finding those partners that have that expertise, that know the risks of your company and the way that you operate is going to be really important when you're putting something like venture debt in place. Additionally, I'd say just the help with expanding globally as well. So obviously HSBC is a global brand. Again, there's others out there, but we also help kind of create different global footprints with our clients and kind of strategize on global expansion as well.
I think the support, not just the financial support, but the networking support, I think is really important. But you mentioned something a few minutes ago, which was around the risk, the assessment of risk, particularly when you're talking about venture debt. Uh, when a founder, when a startup is getting going, and they're looking for funding and debt in particular, what sorts of criteria are they being judged against? What are the risk factors that are taken into account when making a decision as to whether to support a particular development or not support a particular development?
Yeah, good question. So I can speak for HSBC Innovation Banking, of course,
Yeah.
the best, but the way that we assess a venture debt opportunity at an early stage, and I guess to confirm, like all of the businesses I work with are still cash burning, which is a bit funky to people out kind of outside the business lending to cash burning businesses, but we do it day in and day out. And the way that we get comfortable with it is we do have amazing relationships kind of with the investor syndicates putting money in place. And we do have the sector expertise in hand. So when we're approaching companies and talking about venture debt, we very much understand, like you're saying, the risks of the company. So this cash burning element of the company, and also have great relationships with hopefully the founders and the investors as well. So making sure everyone around the table is very confident in taking on a venture debt product, what they're using it for, and kind of understanding how to use the debt, while also not over leveraging a business. Of course, there's going to be other other players in the space that can provide more capital. We like to kind of sit back and figure out what's best for the company and get creative with the way that we're lending to companies, again, without over leveraging.
And so, from is a traditional kind of debt product would invariably require the person coming in and asking for the loan or asking for the funding to provide some kind of security or some something by way of assets. If an organization's just starting up, it very often doesn't have huge assets. How do you balance that out in terms of assessing the risk, particularly if it's burning cash at a certain rate, versus making sure the bank is kind of secure and will get its money back?
Yeah, good question. So we are taking a security over the full company. And that's what most lenders in the space will do. So it's really important that, and of course there's great partners out there, but it's really important that you find a partner that you trust and that you can work with and that understands your business, because at the end of the day, venture debt is a debt product and we're expecting to get paid back, but there's ways that that companies and firms kind of work with companies that are in distressed situations. Of course, we hope that that's never the case, but there's different ways that we can kind of help support companies in a distressed situation, that are going to be kind of different across the board of other venture debt providers. So again, that's kind of why we always like to be really involved in the business model itself, understand the business model, but also understand who sits on the board and who's making the decisions, and really align ourselves with kind of the investor syndicate and the founders, and make sure that everyone is on board with the use case of the debt and the use case of debt today and kind of what you want to use it for in the next 12 or so months. And we have check-ins with companies on a monthly basis to make sure that um, their company is going as planned, and if not, why, and kind of chat about how that affects the business going forward. So we have a really close hand-in-hand relationship with all of our borrowers.
Yes, I would imagine that that's really important because you are supporting this business and the decisions that are being made, particularly when you're talking about AI and how quickly the technology changes. You've got to be kind of, yeah, almost in the business without kind of running the business. But yes, that's very interesting. Um, in terms of you mentioned beyond capital, beyond the debt itself, that it's important for founders to have a much wider base of support. And I
Mhm.
just wondered if you could maybe reflect on the sorts of support that you've seen organizations needing beyond just the debt finance or the capital, the funding element to getting a business off the ground.
Yeah, I think a lot of it is founders need support with just connections in the space, whether that be help with investor connections, which always is really fun to kind of connect an investor with the founder, but also just connections with, what law firm should I use? I want to expand in the US. How should I be thinking about that? Um, what type of bank accounts can you provide? Not just bank accounts, but the support of, again, different firms that can kind of help guide them through that process. If they need help with hiring as well, there's a lot of different people that we kind of know in the space and kind of point them in the right direction of partners that we've worked with in the past. So I think just the connections overall that uh, a bank like HSBC Innovation Banking, who only works in the tech industry, has is really valuable to our client base in general.
Sydney, you've really given us some excellent examples of what organizations, what the banks are looking for when they are funding and getting a founder started up at the earliest stage. I wonder if you could maybe help by explaining or giving us some insights into what's that life cycle from going to kind of seed funding all the way through to an IPO. What's a typical life cycle going through that?
Yeah, it's a great question because it's, I think, what what we do really well. We have, like I said, teams that kind of support at different sectors and different stages. So we have an early stage banking team that comes in when companies raise pre-seed, seed stage rounds. They open up accounts for them, and at that point, they're really there for them to chat about more of those connections they can make in the space. We do a lot of events within the stage that I'm talking about, the early stage banking, but also the sector. So they'll have, you know, software events kind of at that stage, bring on investors that are looking for seed stage investments. They'll bring on different partners like insurance partners and law firms and other partners that will help support the business at that life cycle. Once a company raises a Series A, they graduate onto what we call our venture and growth team that I sit on. And at that stage, we can really start exploring different product sets within the bank. So if that's, has to do with venture debt, like we talked about, or just the basic kind of banking products of treasury, making sure that you're making the right yield on your cash that you've hard earned and raised. Different product sets like cards and BACS facilities as well, and continuing those types of events that might look a little different than the early stage events, but similarly kind of connecting founders that have similar problems together, connecting them with different investors in the space, and different products, different partners as well. And then once you kind of become cash flow positive, thinking about an IPO or some type of exit, our debt facilities also scale with the company. So there's going to be different debt facilities that you can use for M&A or kind of that IPO prep. And we have a different team that only focuses on what we call our corporate stage clients. So clients that are consistently cash flow positive, and also at that public stage. So they're there to help support more complex needs of businesses at that time.
Great, thank you for that insight into that journey, because I would imagine there may well be some founders listening to this thinking, how do I kind of get started, and what's that journey as I grow and expand? Sydney, looking forward to 2026 and possibly even beyond, what do you see as some of the key sectors that are likely to be expanding? What are some of the key trends that you're starting to pick up already?
Yeah, I mean, when we look at 2026 and beyond, all companies should be using AI within their work streams. We're seeing a lot of different kind of workflow automations that are coming about and getting a lot of funding in the space as well. So I think just the day-to-day life of a corporate worker is going to look very different and hopefully more productive. I think I'm excited to use more tools to help with emails and just like different work streams that I do every single day. So I'm really excited about that as a consumer and obviously, as a partner to a lot of these businesses. But I think that overall, and we've just talked about this, but just the AI governance is going to be really important to watch, especially next year and years beyond, because as a consumer, I really want to continue to use these types of products. But I think that just the safety and compliance tooling and nailing that down is going to be really important so we can expand the AI adoption beyond what we see today.
And are there particular aspects of, for instance, AI governance that you or the banks look at when they are taking those decisions? Are there things that companies must have in place from their own internal governance in terms of when taking those, for instance, decisions on whether to give someone debt or support them financially?
I don't know if we have like set AI governance that we're looking at within the business because each business model is pretty unique. It's definitely
Mhm.
something we chat to about with the founders and the investor syndicates. I'd say most of the time our diligence is more so on the performance of the business, of course, the product set itself, and also like the cybersecurity that they have at hand as well. And kind of looking towards the forecast and making sure that that makes sense with companies. But I'd say especially AI companies are so unique from business model to business model, it's kind of something that we look into kind of in a case-by-case basis.
Yeah, AI governance, I think, and the responsible use of AI is, I think, becoming increasingly important when developing businesses and their business models. Um, for companies that are for AI companies in particular that are based in the UK, um, what do you see as the next big opportunity areas?
Yeah, good question. I think just the continuous adoption. You asked about that in the beginning of the interview, and I do think that there's incredible adoption today, but I do think that the market is much bigger than what we see today, even in the UK. So I think just the adoption of AI tooling within workspaces um, and beyond is going to be really interesting to continue to watch.
Sydney, you've really shone a light in an area that I think doesn't get spoken about very often, which is really the funding of businesses, the funding of businesses all the way from startups through to Series A and beyond. And really for the UK to get that funding model right, I think is going to be really important. Um, Clearly, there are angel investors and there are the family and friends to kind of get the get the companies off onto their initial journey to growth. But beyond that, how companies such as HSBC Innovation Banking, but also some of the other organizations that are out there providing that similar support, having that support, not just for the funding, as you've said, but also beyond that, the networking, the connections, the making sure the right partners come together to support every organization, which I fully agree with you is different and has its own business model, I think is really important. So thank you for sharing your insights with me and the AI Adoption Podcast.
Yeah, thank you so much for having me. It's been a fun to explore ways that HSBC Innovation Banking is working with companies as well as just talk about the market in general. Thank you so much.